Looking into the US market data in the past 24 hours, the Dow Jones is down, the Nasdaq slightly up. We've seen a bit of a sell-off into the close. The S&P 500 has finished in the red. We can also see that the Dow is down, as well as gold and oil. In terms of a bit of a snapshot, we had 36.25 advances and 38.59 decliners. Across global markets yesterday, the Aussie market and the Asian markets were down. The US and Canadian markets were up. In this video, I'd like to talk to you about Rule 268, CTKS structure determines price waves. This will take a lot of the stress out of trading and investing. Let's run the numbers. The main issues affecting the market right now are concerns on the impact of the tax and spending bill and rising US deficit concerns. The tax and spending bill, the key features are tax cuts and increased defense spending. The fiscal impact is nearly $4 trillion. National debt currently stands at $36 trillion. The markets have been a little bit shaky, as we saw in a recent market reaction to the 30-year Treasury 5.14%. This is the highest since 2023. And there are currently mixed signals across housing and labor data. Welcome back to the Daily Show, everyone. When we talk about CTKS structure, this is a very specific way of marking up a price chart. And what we're going to look through are price charts and an explanation of their structure. This is an incredibly powerful rule. It takes all the guesswork out of knowing where smart money is buying and selling. When we look at the S&P 500, the Nasdaq, the Russell, the Dow, the DAX, the Nikkei, the ASX in Australia, and the Hang Seng in China, we've seen a very good recovery from that sell-off when the tariffs just hit the market, and they hit the market quite badly. One thing to note, all of these price waves are structurally bound. That is an incredible understanding. When you understand structure, it's an absolute game changer. These price actions, these price waves may look random, but they are not random at all. The Russell 2000 index is a small cap index in the US and can give us a really good insight into the health of the underpinning economy. When we just zoom in over the past couple of days, what we're seeing here is negative action. Now, this particular action may look really random to you, but if you have a knowledge of structure, it's an absolute game changer. Now, in order to look at structure, we mark up our charts with the method, which is Level 1 and Level 2 standard certification. Now, what we see here, these are not just random lines drawn literally randomly on the screen. This is a standard structure-based method, and these lines look to the right. If you look at this particular line, this is overhead structural resistance at the 2054 mark. There are many rules when it comes to interpreting this structure. This is structural resistance at the current time. If we look down, we can see a lot of structural support. There are lighter layers here, 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 here of structure, and then quite a heavy one. You can see that we just simply couldn't convert this particular 2054 level into structural support. It was resistance, 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 and the sellers started to cascade into the market. And where did the Russell 2000 turn around? It came through all these safety nets and was rebounded right back to structural overhead resistance. This is why it's so critical to know where the safety nets are, especially in negative or volatile markets, and we're entering a period of volatility now. As a community, we know that we don't have to make big percentages to make really huge percentage gains. It's all due to the power of compounding. Therefore, when we look in a little bit more deeply on the Russell, we understand this price action is due to structure. Structural failures mean lower levels of structure open up. Structural passes mean higher levels of structure open up. But every single chart is structurally bound, and when you know this, it's a huge, huge opportunity. Structure works across crypto, the stock market, Forex, commodities, every single price chart that has a candlestick pattern. And when we look at Bitcoin, which is the most risk-sensitive asset class, Bitcoin has been doing incredibly well. But always, structure is the key. So let's have a look at Bitcoin structure currently. A lot of people think that when you get over a previous all-time high, there's a thing called price discovery. And price discovery means there is no upward resistance. There's only support below. This is a retail myth. There is always structural resistance somewhere in the chart if we get to price discovery. Please know this is really important. So for example, when we got above the previous all-time high in Bitcoin, everybody expected fresh air and hundreds of thousands of dollars to be added to Bitcoin's price instantaneously because, hey, there's no upward structural resistance. Or is there? There is. We can see at the 114,000 mark that there is structural overhead resistance, and there's also resistance around the 110,000. The reason that I showed the major market indexes and Bitcoin together, the Bitcoin follows the indices from a directional stance, not an absolute stance, a directional stance. It's called directional correlation. So if the major market indices keep on coming up, that's going to be good for Bitcoin. But if they come down, Bitcoin cannot escape the stock market's gravity. This is why it's vitally important to know where your structural levels are, either to the downside or to the upside. And most professionals focus more on downside risk than upside gain. When we get into periods of high volatility, that's not a problem. Volatility can go to the upside and of course it can go to the downside as well. Price is always moving in a wave. If we encounter structure, we're going to stop. We're going to encounter that structure and probably pull back until we can gain sufficient strength to get above it. But it's not just the price chart that you're looking at. For example, if all the major market index futures started to drop like bricks, Bitcoin would also drop. A lot of people don't understand intercorrelation and interconnection between charts. They only look at one chart. This is a retail thing and it's very destructive to your portfolio. Now looking at overhead structural resistance, we've got the 114,000 and 116,000 overhead structure. We've got 110,000 and 109,000 in terms of structural support. Bitcoin is currently consolidating. We've seen that Bitcoin has been moving sideways for many hours. It has a slight degree of negative momentum on it at the current time, so it's very important to observe what happens at the $110,000 level. If we get above 112,000, that is very positive to push to 114. If you're trading another crypto, for example Solana or Doge or Pepe or any other crypto, you need to look at Bitcoin structurally, total structurally as well. Now note how Bitcoin and total crypto market cap move together. Bitcoin is of course the blue overlay, so this gives you a really good indication of just how Bitcoin and the entire crypto market move together. Now Bitcoin is structurally bound as is total crypto market cap. So let's have a look at the structural levels. The thing we're looking for is overhead structural resistance and underneath structural support. We can see that we're at a level of structure at this $3.46 trillion area. We're encountering quite a bit of overhead structural resistance. It's very important to understand that Bitcoin and total should be viewed and analyzed together. And for exactly this reason, a lot of people would have thought, okay, Bitcoin has gone into price discovery, it's going to the moon. No, total crypto market cap structural resistance still plays in. And we can see that we've got fairly light structural support around that 3.41 trillion, which is around here in terms of Bitcoin's price, that leveling off. This is going to be a major thing that you need to keep your eye on. So if we reverse engineer that, that's around the 109,800 mark for Bitcoin. So we may need to pay a lot of attention to that specific level. CTKS structure is the world's most advanced smart money buy and sell level detection system. A lot of people think that technical analysis is tea leaf reading, and the reason they think that is because most technical analysts just draw lines very, very randomly. But understanding Rule 268 is an absolute game changer. CTKS structure, as has been proven in real time, determines price waves. A price wave itself is a movement from structural support into structural resistance. So when you see price wobbling around, you may think it's random. It is not. CTKS structure already has it pinned. There's a lot of free resources at ctksmethod.org. These resources can help you to understand how to buy and sell at the right times, not the wrong times. Life's road is a pretty long one, and just always think about this: every positive habit makes you. Deciding to get fit may just start with not snacking on that favorite thing that you know you shouldn't be snacking on. Or maybe just getting to bed a little bit earlier, or speaking more kindly to yourself. There's a lot of positive habits that we can get into that shape our destiny. Please let me know in the comments, what kind of positive habits have you found to be really good for you? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.